What excites me is that despite everything, you have to have a roof over your head. Like people are like, is real estate's not that great of an investment? I'm like, really? Or people will be like, have you invested in the metaverse? Why would I invest in the metaverse? Even the people in the metaverse need a roof over their head. When it comes to real estate, what excites me the most is the potential of it, right? If you invest in stocks and the company goes out of business, your stock is zero.
Yeah.
If your house burns down, you have land value and hopefully a really good insurance
Yeah.
policy, right? So it's a fairly safer bet in that respect.
Welcome, my fellow Flowmasters, to another episode of the Cash Flow Authority podcast. I'm your host, Chris Jansen, founder of the Flow Authority, and this show is for high-performing professionals who did everything right. The degree, the career, the income, but you still feel like there's another level waiting. Here we explore how real estate can become that next challenge worth building so you can take ownership of your future and create a life by design. And today we're joined by a very special guest, Mr. Rick Albert. And Rick is a Los Angeles-based real estate investor, two-time house hacker featured as a case study in the BiggerPockets book, The House Hacking Strategy. Love it, love BiggerPockets. He owns 17 rental units across out-of-state markets, serves as a full-time broker associate, helping clients buy, sell, and invest. And Rick is also the host of the Key to the Angels podcast, where he shares insights on Southern California real estate, investing strategies, and market trends. So awesome to have you here, Rick. Thank you so much for your time today.
Yeah, no, I appreciate the opportunity. Thank you so much.
Absolutely. Yeah, sounds like we both have a little bit similar journey. I house hacked a little bit. You house hacked a little bit. Out-of-state portfolio. You're doing the broker thing. I'm doing the coaching thing, and now we're both doing the podcast. So a lot of synergies there for sure. Yeah. Maybe to start, can you just give a little bit of a background on how you got started first into house hacking, and then how that helped you scale up to your 17 units?
Yeah, absolutely. It was 2015. So when everyone was saying don't buy, we're still in a recession, I'm like, yeah, I think I'm going to buy. So I bought my first condo here in LA. It was a heavy fixer by condo standards. So the current owner, or the owner at the time, she was a heavy smoker.
Okay.
Smoked there for over 30 years. So as you can imagine, you open the door and you can smell the smoke from outside.
Yikes.
So most people were passing on it. And I said, no, this could be fixed. Like anything could be fixed for the right strategy, right price, whatever. And then a little bit about my background. When I first graduated college, one of my first jobs was actually buying foreclosures at the courthouse steps.
Okay.
And then became a project manager and did all that. And I did that for a local developer. So it was nice to be able to understand the numbers, understand, okay, this can be solved. You don't have to tear out all the drywall, all that. Basically, I fixed it up, rinsed out the second bedroom, did that for a few years. Then I leveraged it to buy my second house hack with my then fiance, did the whole ADU thing, right? Accessory dwelling unit, lived in the ADU, rents out the main house because we were broke, swapped. And then we started doing the whole 1031 exchange stuff. So sold the condo, started investing out of state, used a line of credit on my house, invested out of state, and then just built from there.
Nice. That's awesome. Yeah, that's interesting because, again, very similar. I didn't buy a fixer-upper. I bought a condo first. I just lived in it. Didn't really house hack, but nonetheless converted it to a rental later. I did look at, instead of converting it to a rental, I did look at selling it and using all the equity. This was right 2020, 2021 during COVID when all the home prices shot up, and looked at using somehow using that equity to go buy a duplex also in LA Orange County area. And it was just, there was one duplex where I would have also lived in the back, like bungalow ADU, and rented out the main house. And my mom's, really, you're gonna still have to pay, I don't know what it was, maybe $1,500 a month or something. You're gonna have to pay $1,500 to go live in that little dinky little thing. I'm like, hey, I gotta start somewhere. But nonetheless, that's cool. Love the house hack idea. You mentioned home equity line of credit, or I'm assuming that you said line of credit. That's what you're talking about. Can you talk more about that? Because I've used that as well. It's a great tool to have if you can get it.
Yeah. So, one of the real estate only makes sense, to be fair, if you leverage, because otherwise you're actually probably better off investing in the stock market, to be totally fair. Like the returns are going to be the same or better. You don't have to deal with tenants, all that. But with real estate, if you leverage a property, the appreciation's on the asset, not the loan amount.
Yep.
So anytime you have an opportunity to leverage what you have to go buy more properties, do whatever, it's like that's a better use of that money. And I think most of the time when people think home equity lines of credit, they're thinking, I want to add a pool to my house. I want to renovate my house. Like they're using it for personal reasons, which there's nothing wrong with that. If the numbers make sense, the numbers make sense. But it's like, why not use it to go buy the next place?
Exactly.
Why not? There's some great HELOC programs out there. Interest only payments, fixed rate for so many years, all that. So it can make sense in certain circumstances.
Definitely. And if any veterans are listening, I got mine through Navy Federal, who has a great program. It's 95% loan to value, 20-year draw. So it was basically 20 years. And so I'm just using it over and over and over again. It's great. It's really great. Okay, so the first two, those are both in LA, and then you branched out to other states. Is that?
Yeah. So basically what happened was it was 2022 and I had a tenant for 4 years in my condo. Great tenants, whatever. They moved out, and in Los Angeles at the time, because we were still in the COVID era, there was the eviction moratorium, meaning you could put in the perfect tenant. Perfect. The next day they could say, I'm not going to pay anymore. And there's nothing we could do. Like absolutely nothing. So when I spoke to my wife about it, who's effectively my business partner, right, in all this, we talked about, she's like, why take the risk? There's no point. And there was, even with the line of credit, there was still a lot of equity in the property. So we just said, screw it. So we sold it, did a line of credit on our new house hack. And then with our business, we actually have a business partner where we own a couple properties together. So he did a line of credit on his. And so we technically bought a property, quote unquote, cash at a state on a fourplex in Tennessee. And at the same time, just me and my wife, we bought a property in Alabama, a triplex, and then did the BRRRR strategy, right? So you buy, fix it up, but with it, buy, rehab, rent, refinance, repeat. There you go. On the triplex in Birmingham. And that seemed to go well. And then that's how we've been scaling since.
Awesome.
Yeah.
I did that BRRRR strategy once recently. It was, honestly, it was a nightmare, but now that it went through, I'm like, okay, hey, it actually worked. But it was a nightmare for my own reason.
Was that here locally?
No, that was in Wisconsin as well. So it was Midwest.
Okay.
That's where most of my properties are, yeah. It's just, it was more, it wasn't the property that was the problem, it was the people it was my own fault. It was the people that I had working for me there. That was more the issue. But nonetheless, now that all is said and done and I refinanced, now it's cash flowing. I got back what I put into it. It just took a while. That's all. It just took a while. Yeah, there's deals to be had with the BRRRR method in other parts of the country. I don't know about what I could say about LA for the BRRRR method. You can speak more about that. But
it's tricky, to be fair. I always, especially lately, at least 1 to 3 times a week, I have flippers reaching out. Whether it's BRRRR, and it's just like, for a lot of my listings, I know I always have to like sigh about this because 99% of my listings that are fixers, I usually sell them for 10 to 15% more if it goes to the open market. And it's not because I'm necessarily good at my job. Sure I am. Yeah, why not? But it's more if there are end users who are looking to buy it. So it's hard for me to tell my sellers, hey, you should sell it to this flipper for grossly less than what I know I can get you on the open market. So it's much harder here in LA, to your point, especially because things like ADUs, for example, the last appraisal I saw, appraiser gave a value of $100,000 for an ADU, but it cost $130 to $150.
Wow. Okay.
So it's getting harder to make those numbers work. Of course, people are doing it. There's different ways, but no, most of the BRRRR strategies seem to be more out of state.
Yeah, definitely. Nice. Okay. And so Tennessee, Alabama, how are those working out for you? Those markets?
Good question. Generally good. Right now, what we're seeing is a lot of high vacancy, which I didn't have before. One of the properties we have is in Nashville. That one's fine. That one's like cruise control. What was interesting about it is the units are small. They're about 625 square feet, 2 bedrooms. So what we learned was typically tenants don't care about the size. They care more about the bedroom count. I don't know if you've noticed the same thing. But it seems like at some point they're going to bite
Yeah,
back.
yeah.
It seems like I found the ones that are
Okay.
biting back. So basically, we just changed our strategy to be like, okay, we're always going to be the affordable option. And there's nothing
Yeah,
wrong with that. We just plan
yeah.
accordingly. Did just pick up a new one in Clarksville,
Uh-huh.
Tennessee. So we'll see how that goes. Right now, we're doing all the fixing
Yeah.
up, but that one should hopefully rent quickly. And then Alabama, for the most part, it's actually done pretty well. Like I said, we have some vacancies over there, and it's taking a little bit longer to get those filled. But a lot of it's like clockwork. I get emails yearly. Hey, we just increased the rents by 3%. It's automatic. Cool. Typically, they rent quickly. Like I said, we're in a little bit of a slow market right now. It just, you have to be very, when it comes to very low price point
Mm-hmm.
markets, I've noticed there's two things you have to look for. One is what are called war
Mm-hmm.
zones, right? And I use quote unquote. Like people are like, oh my gosh, this looks like a great
Yeah, yeah.
deal and it cash flows. It's like some of those neighborhoods you have higher broken windows, AC units are stolen, things like it on paper it looks
Right.
good, but doesn't necessarily mean it's going to equate to
Yes.
that. So you have to work with the right team. And do you use property managers where you have
I
rental
do.
properties, or do you self manage?
I use property
Okay,
managers
so
except out here. I have one. I have one that I self-manage that
okay.
I'm turning over right now, actually. Yeah.
Oh, there you go. So I will say one of the best things about property managers is if they won't manage it, you don't buy it,
Yeah, very true. Very true. Which, to your
right?
point, my main manager in Milwaukee area, he will manage it in the war zones. He will, but I know he's not going to pay close attention to it. I know he's not going to. It's not going to be his top priority, and I know he's not going to go there at night. And
Right.
then there's only certain times he's going to go there. And in addition to all of that, yes, the repairs, because I own a 5 unit basically in a war zone area, and it comes with the territory. It's the cash flow is great when it's rented.
Yeah, going into
Right,
it.
exactly. The cash flow is great when it's fully rented. Honestly, I could have 2 units rented and it'll cash flow out of five, which that's why I'm like, to me, totally worth it, totally worth it. But nonetheless,
Good
like,
point.
yeah, things break down. It's an older house, things break down. You definitely have more crime. I inherited four tenants, and three of the four we evicted. One of the other fourth we went through eviction, and then her granddaughter came and saved the day and said, "No, I'm going to take care of everything." She paid us all the back rent. She's going to pay the rent moving
Oh,
forward.
wow.
She won't be a problem. And it was only that was the issue, was the rent. There were no other issues with the tenant.
Yeah.
So, nonetheless, yeah, it's a learning process. But so my managers basically, look, I'll manage them. Just stop. I'm not going to go look at them for you. Just stop sending them to me. If you buy one or you whatever, yeah, I'll manage it for you. But yeah, basically he's trying to walk away from that area, so I get it.
Yeah. But it's helpful, right? Because even things can be street by street
Yeah,
in certain
yeah,
neighborhoods, right? So it's nice to be able to have a realtor that's, yeah, I wouldn't buy
yeah,
here. Here's
yeah,
why. Because their honesty is really important. Usually, what I ask, because a realtor, like what I do here is I never tell a client not to buy a property. My job is to tell them the pros and cons and let them help them make a
yeah, for
decision.
sure.
So usually what I then ask is like, would you invest here? Would you buy here?
Yeah,
Yes, no, maybe. And then you can have those conversations, but you have to work with people that are extremely honest.
definitely. And that can be hard to find, to be honest. Like, that can be hard to find.
Yeah. Oh yeah.
Yeah, there's a lot of realtors who are just. I'm not here to badmouth realtors, but
I am. I'm happy to. Go
yeah.
for it.
I'll just say, be careful. Do your vetting. Check, just like you're gonna hire anybody else. You're gonna ultimately pay them a lot of money to do services for you, and some of them will do the bare minimum, and they're gonna tell you whatever they need to tell you to do the deal, right? Because that's the only way they
Yep.
make money. It's why I took a class once where the instructor was saying that real estate always has an upward bias in price, because a higher price benefits almost everybody involved except the one buying it.
Interesting. Yeah.
So like the realtor on the buying side, the
Right.
realtor on the selling side, the seller, just everything's a percentage of the price. The title agents are going to make more money. Just the insurance, just everybody's going to make more money that way. The insurance will charge more because now it costs more to rebuild because the price is higher. Like all these different things.
Yeah.
But
But they don't realize that it's such a relationship
yeah,
business, right? I have clients like I have clients where we've done three, five, six
uh huh,
deals. And it's if a buyer after they buy something realizes my realtor wasn't looking out for
Yeah.
me, then they're going to go find somebody else. But in our line of work, we're not, a little bit controversial. We're not really in the business of buying and selling homes. We're in the business of client acquisition, right? Let's call it what it is. It's a very different job than being a real estate investor. So it's, if I can treat my clients well, and I tell this to my realtors that I work with out of state, if you treat us well, we're going to use you
Yeah.
again. And now they've saved on all that acquisition cost to finding a new client. And yes, both my properties in Alabama, same realtor. Both properties in Tennessee, same realtor. We've done work in St. Louis, same realtor. We did 3 deals with him. So it's, yeah, it's a thing.
And in my opinion too, for anybody who is looking for a realtor for investment properties, most realtors I talk to don't invest. So don't assume that just because they're a realtor that they understand the investment world and they understand the numbers. Because yeah, when I was trying to get into it and buy my first rental property, the realtor was great, fantastic, served me really well, but he definitely did not understand investments. So I did my numbers the way that I learned by reading the book on rental property investing, BiggerPockets book, Brandon Turner, and I ran the numbers that way. And so I felt really confident in the numbers, and they just keep trying to like bring me back. Look, the rents are here and the mortgage is here, so you're good. And I'm like, that's not what the book said. And it doesn't necessarily mean that
it's 2 different personalities.
Yeah, exactly. And it doesn't necessarily mean that your realtor has to be an investor, but certainly helps. If they're a product of the product, they own the product they sell. Those tend to be the best salespeople, and so in my opinion, if you're an investor. My property manager is also a realtor, and he does his own fix and flips. So I know if I go to him, he can help me analyze a deal to make sure that it's going to be a good flip or BRRRR method. Yeah, if you're listening and you're in LA, Rick has done it over multiple times, and so would be a great person for you to reach out to if you're looking for investment properties.
Yeah, no, absolutely. And you're right, especially on the house hacking side, right? So clients have reached out and like, we've seen that you've house hacked. We want to do that too. But the difference, and I always had to clarify because it goes back to the whole like guru thing. It's, I also bought my first place in 2015, my second one in 20, like there was lower interest rates, higher appreciation. So here's what I would do today, right? If I were to house hack today, I would do it very different than what I did in the past.
But those insights are really important.
Right?
Yeah.
No, I agree. Yeah, for sure. But yeah, go for it.
Yeah. Okay. So you work with buyers, sellers, and investors in competitive markets. How do you balance serving your clients while continuing to actively invest yourself?
Good question. A lot of late nights tends to do it. Luckily,
you mentioned your wife is your business partner too. Does she help out on that?
Not really. She's more of like high level decisions. Okay. So like I'll send her like general updates because this is kind of like my pet project, so to speak. She's along for the ride, which to be fair, at first she was not necessarily on board. But then once she started seeing the numbers, started seeing the potential, started seeing what was going on in her life, she's okay, I get it. Nice. Totally get it. There's a couple different ways to balance it. One is, especially if you're investing out of state, you can take advantage of the time, right? So I drop off my daughter at daycare while I'm on the road. Yeah, it's 7:30, 8 a.m. Here in LA, everyone's still quiet, but out of state, they're an hour, 2 hours ahead.
Yeah, definitely.
So I can make phone calls, respond to emails, and like stuff's happening. Yeah. So, you take advantage of some of that drive time.
For sure.
So I've noticed that's actually been really helpful. Also having I noticed over time, my parameters started getting like tighter and tighter. So for example, the most recent one we bought in Clarksville, I was in the middle of doing I call it a partial 1031 exchange because with the house hack, part of the money's tax-free, part of it's not. You're on that clock.
Yeah.
So I was like, okay, this is a new market for me. So I told my realtors, like, look, I don't really have time to study street by street. Here's what I'm looking for. I want to be within blocks of the university. I know that's a safer bet. I know, and boom, we found one. Wrote an offer, negotiated the deal, made it happen. So I just noticed once you figure out what your buy box is, it actually makes things happen much faster.
Yeah, I noticed the same thing for sure. Yeah, if I'm looking, it's like with any marketing, right? If you're advertising or marketing to everyone, you reach no one, right? It's the same thing with real estate.
Right.
if you're looking for anything
Yeah.
anywhere, you think, oh, I can find anything anywhere, so it'll be easy to find something. But no, that makes it so much harder. Yeah, you want to focus this area, this price range, this unit count, this condition, like whatever, all the different things, this rent to price ratio, like all those kind of things.
Yeah.
Yeah, that's huge help. And then you mentioned 1031
Yeah.
exchange. So I've heard mixed reviews of that, and it probably varies tremendously whether you're doing this with. I heard negative things on the multifamily side, but that's from Grant Cardone, who's buying hundreds of units at a time. So it's a very different market. But curious your experience with 1031 because I haven't done it, but the idea is great. Definitely, I love the idea of it.
So 1031 exchange, all you're doing is just deferring the taxes when
Yeah,
you. So you're selling your investment property to go buy something else. It just helps. They're the intermediary to make sure you did it
yeah,
properly. For 12, they charge whatever, 1,200, 1,500 bucks to do
yeah.
it. And you got to move your money anyways. It's worth it. I haven't done it personally. I've helped clients do actually a reverse 1031
Oh,
exchange where they buy the property first and then sell.
oh, okay, okay.
You can do
Interesting.
that.
Okay.
Yeah, because then the 180-day clock works backwards. So now you have 6 months to sell the property rather than
Okay.
buy. More expensive because it usually requires attorneys.
Okay.
So instead of the 1,200 to 1,500, maybe it costs like 9 grand,
Okay.
which in some markets in the lower price points it doesn't make sense. That's way too
Gotcha.
expensive. The higher points like LA, you're like percentage wise, that's not
Yeah.
very much. Really the question isn't so much of is it worth doing a 1031 exchange, it's more of what are you doing with the equity that you have and can you use that equity towards something that's better.
Yeah.
Why would you sell one asset to go buy a worse
Yeah.
asset? That doesn't
Yeah.
make sense.
For sure.
But selling a condo to go buy, let's say, multifamily could make sense. You don't have HOA dues. The combined rents might be higher. Maybe the condo association might have some problems, which is what we're seeing right now across the United States.
Yeah.
A lot of condo issues. So or even if it's just rental policies, right? Rent control, whatever. Like there could be a lot of reasons that actually makes sense to sell an asset. I know they always say buy and
Yeah.
wait, right? Like never sell a property. It's like, no, if the money can be put to better use,
Right.
it can make sense, right? If you have a $400,000 condo with $200,000 in equity, use that $200,000, you can buy $1 million asset.
Yep. Yep.
So you went from a $400. That's like, wow, I just more than doubled my position,
Yeah.
2.5 times my equity
Yeah.
position.
Absolutely.
It can make
Yeah.
sense.
I think the reason that Grant Cardone said he didn't like it is just it doesn't. It's not that he doesn't like it. It's that the time constraint takes the control away from him. So in multifamily, it can take a very long time to go find a replacement property, and you can have very long due diligence periods, and right, so all that stuff. And if the seller knows that you're doing a 1031, they can wait till the last second and then be
I
like,
know, exactly.
"Hey, you know what? I just decided I don't like this offer anymore. We got to renegotiate." And yeah, so that was the issue that I think he was having with it. But it's a trade-off. It is a trade-off. But I think it probably works better in the smaller property space. I would imagine.
Probably. I think it just takes planning, to be fair.
Yeah.
Like, if you're waiting until after the property sells to start analyzing properties, you're
Right.
too late.
That's true. Yeah.
The mistake I made was because my first 1031 exchange was with my condo. I was like, dude, I can buy 5 to 10 unit apartment
Yeah.
buildings in
Yeah.
Alabama. This is a no-brainer. So I started analyzing properties, doing all that. Then came time to my condo sold. I'm like, great. And then that's when I started making calls to the property managers, and no one would rent them. No one would manage them. And that's when I realized about the whole war zone thing, things like that. I'm like, I got to pivot, and I got to pivot
Yeah.
quickly. So that's when we end up doing what we're doing. So I think that 1031 exchanges, don't look at it as I only have 45 days. Look at it as, okay, if you start analyzing the properties, maybe before you even list, right? Because you need to know what you want. Is it even realistic? And then just start getting aggressive. Once it's on the market, and once your current property is on the market, your relinquished property, start analyzing. You can even write offers, make it contingent on the sale of your investment
Yeah.
property.
There you go.
So then it's like when the 45 days happen, you're good to go. When I did my last 1031 exchange, which is the one in Tennessee, it's like I already had an idea of what I wanted. I had two separate buy boxes in two separate markets. I knew what I was looking for, and we entered escrow fairly quickly.
Nice. You said 45 days.
Yeah, we met the timeline.
Is the 45 days to find the replacement property, and then what's the time frame to actually close on it? Do you remember?
Yeah, so you have 45 days from the time you close to identify up to 3 properties.
Oh, okay, to identify.
There are exceptions to more. For example, I actually put, I think, 2 properties on my list. I only closed on one of them, but I was like, just in case. Once, but then you have a total of 180 days to close.
Okay, gotcha.
Yeah, my guess, and I don't know for sure, my guess is in case someone wanted to buy, let's say, a new construction home as a rental, but it wasn't done yet, but at least you locked it in. I think that was probably the idea. But yeah, so 45 days to identify the property, total of 180 days to close.
Gotcha.
And you have to get the 1031 exchange company involved while you're in escrow, not after. Once the property closes, you're SOL.
Okay, makes sense. Okay, moving on. So what mistakes do new investors make when house hacking or also when structuring leases?
Yeah, so let's start with the house hacking side. I think a lot of people are expecting to live for free or at least like break even when they house hack. The problem is you're putting 3.5% down. If the numbers work at 3.5% down, you know the numbers are going to work at 20% down, and an investor is going to buy it and probably pay more money. So you have to look at house hacking from a different perspective. So you have, there's 4 ways to make money in real estate. You have cash flow, which you're going to get. Maybe it doesn't cover everything, but it's something. You get tax benefits, all the tax write-offs, plus as a rental, you can write off part of the depreciation confirmed with your CPA. You have loan buy down. So every time you make a payment, goes towards principal. And then you have potential appreciation. So at the very least, you're guaranteed tax benefits and loan buy down. So I tell a lot of my clients, like, focus on those aspects because all of that's still better than renting.
Yeah.
Really? So that's the first thing. So I tend to say focus more on those aspects when you're house hacking rather than I need to make money today. Because I didn't make money on my first 2 properties. After I moved out, the cash flow was there, but in the beginning, it just wasn't. So that's probably the first one. And then structuring leases, I tend to notice most leases are missing general rules.
Okay.
What are the quiet hours?
Okay.
What are the laundry uses? What is the pet policy? Now, and I'm not an attorney, but in California, you can't discriminate based off an emotional support animal.
Yeah.
So if a tenant moves in, it is. But what I've noticed is, and I've had landlords call me pissed, like livid, because the tenants never disclosed. They signed the lease, and all of a sudden they have an emotional support animal. So what I had started doing is I actually put rules in place for the pets. I'm like, look, we don't allow pets. In the event there is a pet, here are the guidelines.
I think for sure the service animal that's not considered a pet. I don't know, emotional support animal, do they still consider it? If you say here's the rules for pets, they might be like, this is not a pet. This is an emotional support animal. I don't need to follow these rules.
It's a good question. That's a good question for an attorney.
Yeah.
But it'd be things like, you got to pick up after your dog, or hey, there's a certain designated area, or little things like that isn't necessarily related to the pet. It's more because keep in mind, like, people always get mad, like tenants get mad. Why is there a pet deposit? Why is there this? It's never the pet that's the problem. It's usually the owner.
Yeah, true.
Right? I had a tenant with a pet, and they kept letting the dog run free in the front of the house to go to the bathroom when there's an entire backyard for them to do it.
Yeah.
Like, why are you doing it in the front where people are walking by and we were living in the back. So it's just those little things can go a long way. And if a tenant pushes back, which I've never had a tenant push back, you just say, look, we're building a community, especially when you have more than one unit on a property. We're building a community. We're trying to make sure everyone plays nice because nobody knows each other.
Yeah.
And you would want those same rules in place. I would want quiet hours.
Exactly, yeah. Yeah, you want the same respect from the other neighbors that you want to give them. Yeah.
Exactly. Make it reasonable. I know of landlords where they're like, all trash must be put in trash bags. You cannot just throw random stuff in the trash
Yeah.
bin. And I'm like, that's wild. Because there's times that you might have a Starbucks cup that
Yeah.
you just throw away and you know you don't get it. It attracts like raccoons. It stinks up the trash
Yeah.
can. Like, I'm like, okay. And again, people don't typically push back. And I don't know, it's not like the landlord's doing a drive-by.
Yeah. But at least some people are going to follow it, or they'll at least know that it's there as a rule. So it's
Yeah.
doesn't hurt. Yeah,
No, it's more just setting expectations.
definitely. All right. So just to like round things out, what excites you about the future of the market, the future of house hacking, and also just building portfolios long term? There's so much going on right now in the world, in the country, with the government, with the real estate markets. Who knows where it's going to go? I'm not asking you to crystal ball or tell the future, but what excites you?
What excites me is that despite everything, you have to have a roof over your head. Like people are like, is real estate's not that great of an investment? I'm like, really? Or people will be like, have you invested in the metaverse? Why would I invest in the metaverse? Even the people in the metaverse need a roof over their head. When it comes to real estate, and what excites me the most is the potential of it, right? If you invest in stocks and the company goes out of business, your stock is zero.
Yeah.
If your house burns down, you have land value and hopefully a really good insurance
Yeah.
policy, right? So it's a fairly safer bet in that respect. And people are like, well, what if the market crashes? I'm like, who cares if the market crashes? It's a paper
Yeah.
loss. You hold on to, I wish I bought the day before the market crashed in 2000. I'd be 2/3 of the way done with my mortgage and the property would have bounced back in value and actually exceeded it. I'd be in far better shape than anyone who bought in the last 5, 10
Yeah.
years.
That's great. Yeah. Yeah. You got time, right? That's your biggest, that's your best friend in real
Exactly.
estate is time. Absolutely.
I agree. And I think house hacking is a great way to get started. It's a great way to break into a high price point market.
Yeah.
Right? You can, in LA County, you can buy a house with FHA for what? Almost 1.3 million, right? I think the loan amount's like $1 million. Yeah. Okay. Now, if you have a 3% appreciation, you just made most of your down payment back in the first year just in equity.
Yeah. And here's an example. I'm selling the condo I'm living in. I'm moving to Texas, so I'm selling my condo here.
Okay.
Yeah, of course, I would rent it. I'm a real estate investor, but the numbers just don't work. I didn't buy it as a rental. It just,
There
but
you go.
I'm selling it, and I got 2 offers, and both of them were almost identical. Both of them are using FHA, right? 3.5% down. That's about $500,000. But they just said, "Hey, I'm going to offer you," and I did the same when I bought a place too. I'm going to offer you 15,000 above asking, and then I want a credit for 15,000. So literally, they're like, they're not paying any closing costs. The first guy was going to use down payment assistance, so he was going to have zero out of pocket money. Yes, you have private mortgage insurance, so there's that. But look at the monthly payment. If you can pay the monthly payment. And you plan, and here's the other thing though, you have to plan to actually hold the thing long term, because the mistake I
Right?
made with this one, I bought it with a VA loan, so literally no money except I had to pay closing costs. But here I am a year and a half later now selling it. The market hasn't been my best friend, so I'm having to come out of pocket to sell. But that's my own fault. Like I did not buy this thinking for sure I'm going to own this for at least 5 years. I knew when I bought this that I was probably not going to be in California for that many more years. So think of it that way. Like it'll pan out if you own it long term, but if you're only going to hold it short term, that could be something you want to look at your risk at that. So just consider it. But
I agree. Rent.
yeah,
There's nothing wrong with
nothing
renting,
wrong. Yeah,
to be fair. But yeah, you just have to plan for
exactly.
it. I agree.
Awesome. It's been fun, Rick. Before we wrap, where can people find you and connect with you?
Yeah, absolutely. So I'm on all the major social media channels. So Instagram, Facebook, YouTube, at Rick B. Albert. So B in the middle. You can find my podcast, The Key to the City of Angels. That's on Spotify, YouTube, and Apple Podcasts. You can listen there. But those are some of the best ways that you can get a hold of me. If you DM me, I will respond. I'm one of those that actually does respond. Typically same day. Gets a day gets ahead of me.
Awesome. Is it actually you or is it your AI?
It's actually me.
All right.
Good
all right.
question. It's actually me. You will talk to me. What a concept.
I love it. I love it. Hey, nothing wrong with AI, but we're all overwhelmed. We're all
No.
overwhelmed with it, and unless you're like a big guru, I don't know. There's some things that it's so refreshing to actually talk to the person. So
It was like when you used to like send letters out in the mail. Then we switched to email. Oh, it's so cool. We got an
yeah,
email. Now we're wishing stuff would come in
yeah,
the mail.
exactly.
So I agree. I think AI is going to be geared more towards behind the
Mm-hmm.
scenes. The only time it's going to be more front facing is I'm seeing it in property management software where tenants
Right.
could then start to like deduce issues. I think
That's
that's
good.
clever.
Yeah.
I think that's smart because middle of the night comes. If I'm going to get a call at 1 a.m. from one of my tenants, I better have already known like what's going on.
Definitely. Yeah, and I know a lot of
But yeah, I
know a
agree.
lot of folks who use it, yeah, for the short-term rentals because there's always questions. Majority of those questions are in the guidebook or on the posting. Like it's right there. They just don't feel like looking it up, so they message you, and it's easy answer. It's not even. It doesn't even have to be AI. They just can have. Oh, they look it up. They have a little algorithm, looks up the question. It matches this question. Here's your answer. It's pretty simple, but awesome, man. Appreciate your time today. Love the conversation.
Of course.
And love what you're doing with real estate. Keep at it. It's only going to get better. The more you keep going, keep building that portfolio, and then you're supplementing it with all
Great.
your realtor income. So yeah, appreciate your time today. Thanks for joining the show.
Yeah. Of course. Thanks for having me. I appreciate it.
You bet. Thanks for tuning in to this episode of the Cash Flow Authority podcast. We hope the insights shared today help you take the next step toward optimizing your finances and building sustainable wealth. If you enjoyed this conversation, please take a moment to subscribe on your favorite podcast platform and leave us a review. It helps other entrepreneurs and investors discover the show. And don't forget to catch the next episode for more insights. Until then, keep mastering your cash flow.